My name is Rob Downham, and over the next 10 minutes I'm going to explain offset mortgages, the advantages and disadvantages, and take you through an online calculator to demonstrate exactly how offset works. In a nutshell, an offset mortgage is when you use money in your savings or current account to help reduce the mortgage balance you're charged interest on. So let's see what that looks like. If you had a mortgage of, let's say, £100,000 and savings of £50,000, you would actually only be charged interest not on the 100,000 but just on the 50,000. So the savings you've got offsets the mortgage, and that's what you pay interest on. Simples. You'll not earn any interest, but you will save mortgage interest. Interest is calculated daily, so even savings held for a day will reduce the interest charged. My favourite, not the only one we advise on, but externally recognised as the best offset mortgage, is with Woolwich. That's part of the Barclays Group. With this mortgage, you get the option to opt for either a term reduction, where your monthly mortgage payment remains the same, so the money you save on paying interest becomes a capital repayment and hence reduces the term of your mortgage, or a payment reduction, where your monthly mortgage payment reduces by the amount of interest you save. Now, there are lots of various accounts that you can use to offset the mortgage balance. They can be single or joint current accounts, savings accounts, or even cash ISAs. In fact, with Woolwich, you can nominate up to 12 accounts to offset the mortgage, and you can do all this and manage it online. You can also arrange a reserve facility for ultimate flexibility, allowing you to draw down more money against your mortgage if you need to do so in the future. Next, I want to explain a couple of insider secrets of the Woolwich offset that many people, even at Woolwich, probably don't even understand properly. The first one is the ISA allowance. As you're not going to receive interest and therefore pay no tax, many people may feel that there's no benefit in putting money into a cash ISA, rather than just a normal savings account. Well, they would be wrong. Your cash ISA allowance is a use it or lose it benefit once a year. Currently, you can put £5,340 into a cash ISA each year. So for example, if you can save £445 extra per month and place that money into a cash ISA to offset the mortgage, with this money, after 10 years, you'll have built up £53,400 in ISA protected money. When you eventually pay off your mortgage or move to another lender, then this money will retain its ISA wrapper and tax efficiency for the future. Switch and fix. This is another advantage. The Woolwich offset mortgage allows you to switch to a fixed rate at any time, albeit losing the offset benefits of the account. This can give you some extra security if interest rates start to rise. What's more, if you've put your money in ISA wrappers, then your savings will remain tax efficient. Okay, so the providers will probably understand these final 2 points, but I thought they were so important I'd mention them again. If you're a higher rate taxpayer, you get a higher benefit really from offsetting. If you're a higher rate taxpayer, you're taxed at 40 or even 50%, so therefore any interest you don't receive is a better tax advantage. This means that if you receive £1,000, you would actually only receive £600 or £500 after tax. The money against your mortgage will pay, I've lost a little bit there on my thing. I think that point's pretty clear there. Next one is financial organisation. You can have up to 12 accounts offset against your mortgage. As a couple, this allows you to have, say, 2 individual current accounts, a joint current account, 2 individual cash ISAs for longer term savings, and then shorter term savings account, ideally for emergency money, and an occasional spending account for medium or long term savings. If you've read the book that Chris and I have done on how to guarantee financial freedom, all that's explained in more detail there, and an offset account can be a tremendous benefit in managing your financial life properly. Finally, wherever there's advantages, there's always some disadvantages, so let's have a look at those. If you have very little savings and low balances in your current account, then you probably would get a lower rate than those offered by an offset mortgage. And also, you tend only to be able to offset variable tracker rate mortgages. So if you want the benefit of a fixed rate, then again, you might be best looking elsewhere. So, I hope the above was clear. I've covered quite a lot of ground there, so feel free to listen again. Now what I'm going to do is take you through an example of the Woolwich offset calculator. So let's have a look here. Okay, so let's have a look at the Woolwich offset calculator. First of all, let's put in a property value. We'll use £300,000 and a mortgage amount of £200,000. 200,000, yes. On a 25-year repayment, and it can select the right type of interest rate, which is 2.69%. So let's assume you've got £50,000 in your savings account offsetting the mortgage, and that you're going to be able to make regular monthly savings of £500 a month added onto that. And you've got a couple of £1,000 in your current account. Now, I appreciate these are quite big numbers, but it's easier to demonstrate the effect. We're also using a 40% taxpayer here, and initially we get two options. You can either reduce the mortgage term, or you can reduce the mortgage payments, and we're going to reduce the mortgage term. So let's calculate the offset. The graph's just loading up now, and if we scroll down we can have a look at that graph. Okay, so what you notice here is the green line shows your savings, and actually after 10 years you would have enough in your current account to pay off the entire mortgage amount which is still outstanding, which would at that stage be £112,000. However, you don't need to do that, and if you chose not to, the blue line, the lighter blue line, shows you that actually you would pay the mortgage off over just under 20 years instead of the 25 years. Now if we scroll further down, it's going to show us the savings that have been made. So here they go. That's actually going to save you £17,000 worth of interest and £11,000 worth of tax. Now if we go back up, we can change this now to show us what if we chose to actually reduce your monthly payments. So originally those monthly payments were going to be £916 a month, and if we change it to reduce my monthly payments, and the graph is loading again, shouldn't take a second for this to load, so I'll just scroll down. Problem retrieving data, these things happen. Scroll up and update the graph again. Okay, it's now done that. So it's shown that we could actually save £169.70 on our mortgage payments. So now we'd be paying £641.89, and we're going to be saving £50,000 worth of mortgage interest and £15,000 or £15,722 in tax. So excellent news. So hopefully this has shown you and given you an overview as to how a offset mortgage works, and shows you how to use the calculator. On our website will be a link to the Woolwich mortgage calculator, so you can go in and play with those numbers and put in your figures and see whether you think it will be of benefit to you. Hopefully you found this overview of offset mortgages useful, and if you've got any questions, please get in touch with Simplicity Financial Services and we will be delighted to assist. Thank you very much.